Well, all right, we are taking a look at, well, obviously the end of the week, and we're taking a look at a market where we've had a quite bullish move in really the relative outperforming indices. And yeah, I'm definitely talking about the NASDAQ and even to a lesser degree, the ES and the YM, which have most definitely benefited from at least a little bit more stability around the 200 period exponential moving average on the XLF. What's really cool about the XLF trying to really hasn't had a convincing week. Let's see what Friday brings. But what's really interesting about where the XLF sits right now is as we go through the remainder of November and into December, if we can start to climb above that 200 propulsion, XLF and presuming XLK remains as strong as it is, this bodes really well for follow through on the S&P. So NASDAQ's been a little bit better on follow through because the main heavily weighted sectors within it have been far more bullish, tech, communications, as opposed to the combo of tech and financials that would benefit the S&P the most. But that's where we sit. I do want to mention, as I like to talk about my book, because that's all that matters. Who cares what I think? What are you doing, Rog? We've got a long position in semiconductors, SMH, long position in the NASDAQ via QQQ. Got really close, tried our darndest to get a long position in the SPY, which goes back to the Tuesday free video that I shared with you all back at the Simpler Trading YouTube channel. You know, what is it that I want to do with ES, MES, SPY, and of course, the class favorite SPX. But regardless of which way you go about doing it, the thing to remember is that as we're looking at any of these indices, following through, the components within them really are going to be whether or not we see the really great follow through or not. Those are going to be the deciding factor. All right. And by the way, the swings that I'm still putting on are really based on the 1 hour time frame. It's going to allow us to use the daily price movement range, the gray and gold zones on my chart, but it's also going to allow us to have a smaller time horizon window, nearer dated options, a more affordable, scalable entry. There's a lot that I like about being a little bit more nimble with my swings right now. And that's what's mapping out to the alerts and the trades that we're doing in the Sector Secrets Mastery. All right, so let's get to it. As always, gang. And hey there, Ann from our Essentials room. Question is about the VIX. Sure. And the question is, might I look at the VIX, not to trade, but just for info? And I seldom actually look at the VIX. It's a futures contract. So if you notice, I brought up the VX and not the VIX, although VXX is fine too. I don't look at the VIX as any kind of reason to be bullish or bearish, frankly, when I'm trading. And the reason being is, I'm going to understand what the NASDAQ is doing best by looking at the top weighted stocks and the top weighted sectors. I'm going to understand what the Dow, the S&P, the Russell are doing based on that, right? Now, the VIX is interesting. And please know where I'm coming from, gang, when I tell you I don't use the VIX. Anyone who uses the VIX to good results, frankly, I'll tell you straight up, who cares what I say or think? But if you're thinking, Rog, I think I'm supposed to use the VIX, but I'm not really getting a lot of clarity from it. Treat the VIX as simply a contract that you would trade. I've traded VIX futures in the past. I like trading them, right? But I don't think they're a harbinger to what's going to happen in the indices. Here's why. Think about the indices and their high concentration weighting. Now think about the VIX. How is it composed? What is it measuring? What's the actual formula for it? And if you look into it a little bit more, you realize it has nothing to do with the way the broader averages are weighted. The key being, it is not a high concentration weighted tool. And if it's not, it's measuring something, but in the way, well, let me put it this way. If we're all making cookies, what do you need in cookies? Sugar, flour, baking soda, egg. What if I told you, rather than giving you specific measurements for each one of those 5, 6 ingredients, you added all of them in equal proportion? Disgusting and unedible. That's kind of what market internals are. It's looking at a recipe and adding equal parts of every single ingredient rather than realize that every ingredient has an individual measurement. Our indices are that way. Dow, Russell, NASDAQ, S&P, right, are all weighted in that way. So I don't actually think about it at all. I don't use market internals because it's like making a cookie with equal parts egg, flour, and sugar. I mean, I don't know. Is that a quiche at this point? Not sure. But chocolate chip quiche, it doesn't even sound interesting. All right. But anyway, and that's why I look at it as a cool contract to trade in the same way that I would look at, say, ZB or CL or GC. Right. So great question. Thank you for asking. And again, gang, as always, this is just the way that I look at the market. Granted, it's been 30 years of what works for me, but I think everyone's got to find their path and their tools. And it's my job to share those with as much transparency and logic as I can. So thanks for the question. Awesome. All right. First up from our YouTube channel, Delta asks, how do I approach watch list building on an hourly time frame? The same way I do everything else, Delta, relative performance. And relative to what? Relative to that high concentration weighting. What are the steps? In a 20-minute show, Delta, I can't put on a workshop, but let me give you a little bit of insight into what we do in the Sector Secrets Mastery. We wake up in the morning, got to know what economic events are coming. Today, I've got the University of Michigan inflation expectations. That's going to be a rock'em sock'em event, as it has been for a bit now. So I want to know when those high impact events are going to happen. And this is going to apply to swings as well, to the 1 hour as well. In fact, our setups in the SMH, the SPY, the QQQ were predicated on Powell speaking yesterday at 2. So those hot zones are going to be part of the catalyst to the movement that I want to my entries. All right. So then the other part of it is the daily time frame. No, I do not at all use multiple time frame confirmation. If I have come to the dance with the 1 hour QQQ, I'm leaving with the 1 hour QQQ. The problem with multiple time frame confirmation isn't that it's not that it doesn't work. I'm sure there's plenty of people that use it to some degree of success. But what I have noted again and again is the trap that it inevitably creates. And that is, if we get in with a 5-minute chart, but you've got a 30-minute chart on your screen, how often should you exit a 5-minute day trade, but the brain goes, oh, but the 30 thinks the trade is okay? And this is a classic cognitive bias that is so well described in one of my favorite trading books. I've had it on my shelf for over 2 decades. What I Learned Losing $1 Million. And it asks a very simple question. Are you long because you're bullish, which is what we should be doing, or are we bullish because you're long? The latter is what happens when you start multiple time frame confirmation. I've seen people justify 30-minute time frame setups because the monthly is doing something. Really? That's the problem. And that's why I don't do it. So no, the 1 hour can stand on its own because its structure is going to be unique. The 1 hour slice of psychology, how I feel for an hour, right? Let's think about humans, because that's really what we're trading. What I think about it for an hour is not what I'm going to think about for 24 hours. What I'm thinking for 5 minutes doesn't necessarily mean what my mood for an hour. And if you think about human beings, it's really what we're looking at. All these candles are people. Just because I feel this way for this 5 minute doesn't mean that's what they're going to feel like for the next 55 minutes, right? If I look at a 24-hour chart, a daily candle, that's 1,440 minutes, right? Do I presume that all 1,440 are going to be the same as what I'm seeing on the 60? No. So that's the way I look at multiple time frame. Don't want to do it. Been there, by the way, right? Been there, done that. Hasn't served me. All right. Next up is Randy asked about the IWM. All right. So I'm going to take that over to the Russell. Randy, if I'm looking at the Russell, let's go back to high concentration weighting. I want the Russell and I want the KRE. I want them moving together because this is the number one weighted sector in the Russell. This is my favorite short. So when you see all the people that are talking about harbingers of doom, I guess they've been doing that all year. I wonder how that's going for them. Well, if they've been doing it in the Russell, they've been doing okay, because the way in which the Russell's weighted with so much regional bank and the way the regional banks got absolutely hammered in March, the Russell has yet to come back from that. So there is a weak sector. We don't talk about the markets being weak, right? That's obtuse. But what we do want to remember is each one of the indices has different weighting and has been to varying degrees up or down on the year. Russell is a mess. If I'm going to be longer term short, it's Russell. Now, day to day, Randy, you didn't mention a time frame, so I'm just sort of extrapolating here. Day to day, it's going to be taking a look at the 5-minute. What's the structure? Where are we in relation to a number of sentiment reads? And then I'll make a decision about what I want to do. But day to day, I get to start off with a clean sheet, with a fresh page, with an open mind, fresh eyes, right? So I'm very bearish overall, Russell. It's a great place to be longer term short. All right. Next up from our essentials room, Mary asked, do I see the NQ retracing and possible levels to watch? Mary, I'm already in the NQ on a retracement, so I can't say yet because that is what I did yesterday. So Mary, let me give you an idea of what we did. Actually, let's see if I can't bring this up here. So what we did yesterday in the Sector Secrets Mastery is with the Powell volatility, and I'm looking at my Sector Secrets Mastery room here. All right, I'll read you exactly what we did. So before I take a trade, so everyone understands the context of how we send out alerts at the Sector Secrets Mastery. So before the move is made, don't we already know, right? Everyone here, don't we already know what we want to do and where we want to do it? And if we don't, why not? Like, shouldn't we have a trigger? Shouldn't we have a timing element? And so that's what we use. We use a timing element of Powell, and we had been planning that since the beginning of the week. And we knew that we wanted to focus on relative outperformers, and top of the line were things like Microsoft, Google. I think Meta was part of the conversation, SMH, QQQ, SPY. I decided to go broader. So rather than an individual stock or the boat, right, I went with a tide. I went with the SMH sector. I went with the QQQ index, the SPY index. So our plan was to buy the 17 November expiration, 367 call, which is what I hold right now in the QQQ. And the trigger was anywhere between 370.63 and 370.16. So pretty narrow range that once we got into that zone, we could then buy the call. Remember, when things are selling off like this, it is really in relative to buying a call when markets are moving higher. So a lot of you might be saying, Rog, you're buying a call when markets are moving lower? Yeah, I'm not a Momo player. Momo players would be buying puts and would be, frankly, overpaying for those puts because everybody wants the short position when the markets are sinking. If you're a retracement player or mean reversion player, then buy the dip. That's buying the dip in many ways. How can we take advantage of a predetermined spot within an overall trend and say, if we get to this zone, that's where I want to buy the call. And that's what we did. We are right now about 23 cents from our first target, which means that when the bell rings for my trader saying, Rog, we're up really nicely. Imagine buying calls. And I don't have my drawing tools up. Let me sort that out here real quick. Imagine how easily and inexpensively you can buy calls when this is happening at that predetermined spot. And then when we open, right, you got a couple of choices. Rog, I might just liquidate on the open. Or I'll wait for that, where I believe our first target is 371.90. Or I'll wait for 90. We're right there. So in this zone, we're going to look to start hopefully paying ourselves, moving a stop to break even, and then seeing what the University of Michigan inflation expectations have to bring. So that's how that works. That's how that works. And I'm using a 1 hour. So again, I think the most valuable thing I can do, frankly, is talk my book. Not talk what I think, not analyze the market. This is what I have on, and this is why it makes sense. And most importantly, this is how I'm managing risk. All right. So thanks for the question. I appreciate that. All right. Moving on to our next question is, bear with me. Let's see. Munair asks, what would I do with MU on the 5-minute? Munair, I would day trade it. I mean, that's really the answer. I would day trade it. Now, do I have some directional bias this morning? Yes, as long as after the bell, as long as after the 9:30 bell, I've got still green structure on MU. I would look to buy it and stick to the long side. I would much prefer things like SMH or agreeing. Now, all my cards on the table, gang. And frankly, gang, open positions are all that matter. I'm long SMH, so I'm already looking long Munair. So there's a little bit of bias I'm going to have based on what the 5 minute is telling me, which is up. There's going to be bias that I have on the 1 hour, which is telling me up. And if things like MU, NVDA, AMD can move higher, Yahtzee, we're in good shape. Mike, how are you? Can tax loss harvesting at the end of December be as severe as tax loss harvesting at the end of October with that mutual fund year end? Right. In those spots that took it the hardest, yes, I'm going to use, Mike, I'm going to use October as my map to December. So that's something we'll definitely be talking a lot more about in the Sector Secrets Mastery, which is what did October and sort of a little bit of a trailer before the movie, right? What did the trailer before the movie, the tax loss harvesting movie, to show us in October, and then how can we map that forward to December? So in a word, in those places that are down on the year, in those places where tax loss harvesting can be that offset, that's all that it really is, right? But remember, it's not just weakness gets weaker, Mike. Remember, the flip side of tax loss harvesting is sort of window dressing, Santa rally, right? So strength can get stronger. Let's keep in mind both sides of that. Yeah. All right. Dr. Watkins asked, do we have an idea of what lit the fire under the NAS this morning? Dr. Watkins, I had a buddy of mine, and probably many of you have had this experience. The markets were rallying. I'm thinking, what's doing this? And deadpan, this trader next to me. Now, mind you, I had been only trading at this point when I uttered this aloud. I was trading, we were doing after hours SOS trading. Crazy. This is the mid 90s, early to mid 90s, I think this was. I said, what is this market doing? Why is it moving higher? And I think we were all in this room, this trading room in Boca. I remember this pretty vividly. And one of the older traders, at this point, I had been trading for about 7 years, and looked at me and said, more buyers and sellers. And what he really should have said is more buying than selling, but that's all that it is. That's sometimes all that it is. I'm sure there's a catalyst. We had some FOMC speak this morning. I'm sure there's some kind of reason. It could be volume. It could be time. It could be FOMC. It could be any number of things. But when you boil it right down to it, what is the essence of it? More people willing to buy at higher highs, and more people, and the sellers are just raising the price. It's a seller's market. And I just sometimes want to reduce it to just something that simple. So you're in that long position too, Dr. Watkins? Awesome. Hey, I'm happy they are. Sometimes I'm less interested in the why, Dr. Watkins, and I'm just interested in the what, which is what do I need to do next, right? Okay, cool. All right, so moving on. So very cool. That's a good position to have. I was really looking for a trio, SMH, SPY, and QQQ. And you might say, well, Rog, why didn't you get the SPY? What happened? It didn't get into my zone. And folks, you might think, well, Rog, are you going to be that specific about the zone that you're waiting on? Oh gosh, yeah, I am that specific, gang. That's discipline, right? That's not stubbornness. That's absolutely discipline. In other words, if I don't get my price, I'm actually trying to find this great image that I usually keep in my I can't find it. It's an image that Warren Buffett used in Becoming Buffett, and there it is. He's got a picture he's got this picture from Ted Williams' book. I think he's got his face photoshopped over top of it, and this is how he thinks about his investing. This is how I think about trading. A lot of places the ball can be thrown, right? But do you see how there's a very specific zone that Ted knew this is my zone? Now, remember, a lot of us here, hundreds of us in here, right? Everyone's zone is going to be a little different. So it's not my job to tell you this is your zone, right? It's my job to say, hey, let's figure out how to identify zones. And this is the zone that worked for me. And unless I get that pitch, I know that my follow through is not going to be there, my pricing is not going to be there, and my risk management's not going to be there. And unless I get those three things, I'm not going to take the trade, because there'll always be another pitch. I mean, the market is the pitcher. The market's always going to be hurling things at us, right? My job is sit there stoically and discerningly and say, is that my pitch or not? And that's what great hitters do. Yes, I'm a baseball fan. That's what great hitters do. They know their zone. Now, even greater hitters have a wider, more varied zone, and all of us as traders can develop that too. But this is what we do day in and day out. Develop that zone and get the discipline to wait for it. All right, gang. As always, thank you so much for being a part of Charts and Coffee. I'll see you on Sunday for Top Tier Outlook, 6 p.m. Eastern, right here at the Simpler Trading YouTube channel, my YouTube channel at Raghee Horner, and of course my Twitter. So shout out to my Twitter peeps as well. Be good to each other.